We are live. Good morning, everybody. Welcome to the morning show. This is Stock Market TV. You're watching us here on the interwebs, on YouTube, on Twitter, on stockmarkettv.com. Spencer Israel, Steve Strazza, special guest host Jason Purz on the show today. We'll be joined by Mary Thwaites. We'll be joined by Kenny Glick. We'll be joined by Brian Lund. So we got a lot to get to. Should we just run it? Let's just run it. Get to it. We got a lot of charts in the deck already. I see a slide 2. I see a slide 16. There's a lot in there. Jam-packed show. We'll talk oil. We'll talk dollar. We'll talk rates. We'll talk earnings. We'll talk whatever the heck Brian wants to talk about. I don't even know. Or Mary. I don't know. It'll be a surprise for us all. If you're watching us on YouTube, do me a favor. Hit the thumbs up, please, and thank you. Let's bring on the guys and start this show. Good morning.
What's up, boys?
I'm in a good mood. I was just telling Jason, like, the weather has turned. Not Steve, you don't experience seasons, so this doesn't apply to you. But like the rest of us have seasons. It gets cold, and then it gets warm again. And the weather, I think, has turned to the spring. We're getting some 50, 60-degree weather here in the Northeast. We're getting more sunlight, and I'm here for it. I'm happy.
Strazza has a big smile on his face, like I don't have to deal with any of this.
Don't have to deal with that. No.
I'm smiling like all my call options are already in the money, and I still got 3 days to go this week.
There we go.
All right.
It's that smile.
Yeah.
No, I don't think there's a better time to have our chief global macro / war correspondent, Jason Purz, here today to kind of talk us through these crazy times. We're getting volatility in both directions. This morning, we have some crypto news sending that whole complex higher.
Yes.
Brian Armstrong, I guess, met with the president and other White House officials about the crypto legislation. Trump sent a tweet basically saying, back off banks and let this legislation go through. The really only thing going on there is that they want to be able to pass through a yield to their customers from the staking for the stable coin situation. And that'll end up being probably about like a 3 to 4% interest rate. So they're worried if you're getting 0.3% in your savings account or whatever, that the banks are going to lose deposits. And they do everything in their capacity to kind of stop these things from happening. That's what stalled out the crypto legislation a couple weeks ago. It looks like we might be getting some clarity there, and the whole crypto space is rallying because of it. We already saw some serious momentum off the lows for the whole growth tech trade, right? While everybody's looking at these commodity stocks, Jason, and the action and energy quietly, and now, almost with no one paying attention, software and tech and everything else is looking really bottoming. And I think a nice rebound rally is underway here.
Okay.
Yeah, I saw a nice squeeze watch report talking about your guys watching the software stocks currently and kind of where we're looking at there. I mean, there's a lot of things that are kind of bottoming out. It's like that's one way to think about it is it a bull market rally? Are we still in a bull market? And if we are still in a bull market, software will probably join. Technology will probably join. So I think it's a good idea, to start looking at some of these areas. Not my favorite areas currently, but I definitely think like we're set up for a nice move here.
It's a question of time frame. We spent a lot of time talking about this on the monthly call. Mm-hmm. You got to know who you are and what you're trying to accomplish out here. Are you trying to make money in your energy stocks over the course of the next 12 months? Mm-hmm. Or are you trying to make money this month? If you're trying to make money this month, I don't think this is a great entry, right? Can we keep dripping higher on war headlines? Probably. But most of the, good stuff in energy is already extended. A little corrective wave. Talk to me in a month. I'll be like, hell yeah, it's time to, pour back into energy. Probably going a lot higher over the course of the next year, 2, even 3 years. I think that's a long-term trend. Then you look at something like tech or even financials here or speculative growth stocks. been really hit hard over the past few weeks, some past few months, quarters even. Really nice rebound opportunities, and even trade a counter trend waves. It depends on what you're trying to do, I think.
What do you think about crypto too? Because it kind of looks very similar to software. Is it all kind of a similar trade currently, where you're kind of looking at both areas?
So long crypto right now for a trade. I think we're going to get a ripper off of these lows. You got these nice little bear flags down here. Something like Bitcoin, couldn't find a better level, right, for a bounce. So I think a couple days, couple weeks of upside, then we reassess, right, see where that bounce takes us, and go from there. But a lot of these, areas in the market, not just crypto, but tech too, have been really battered. So I think you do have room for nice mean reversion wave higher on some of these laggards.
And so similarly, if you're looking at like we're talking about time frames, call options, you're going to be trading especially the shorter term ones. I know you guys buy leaps too, but the more shorter term ones, you guys are looking for more of these big quick pops, big moves, under prices, and getting those quick money and getting that those doubles pretty quickly. I saw you guys been putting out a bunch of reports this week, just double. I think you had a 4x trade in there, a bunch of stuff.
Yeah, I think we did a 4x on the Exxon, and then gave it all back coming into the week. Robinhood, we almost got a double on in the same day. We'll probably double here this morning. But there's a lot going on. There's a lot that we could trade. So I think we should dive into a little state of the markets, talk about it. Let's run through. I know, Jason, you brought a bunch of great charts.
Let's do it.
Let's do it. All right. Where do things stand this morning? Things are quieter this morning than they have been, I feel like, in the past couple of mornings. Stock index futures all higher, right? Russell leading the way, up about 2/3%. But the NASDAQ, S&P, Dow also all in the green. Oil down 0.5%. Quiet morning for that. We'll talk more about that in a little bit. Gold higher 1.5%. Bitcoin up 5%, like Steve was just talking about. ETH, same thing. International markets just all kind of weak here as they continue to digest. Again, it's just like yesterday, South Korea is leading the way to the downside.
Why is that, Jason? Is that because of geography?
I mean, honestly, if I'm looking at South Korea, we're kind of seeing these massive flows, right? These massive flows have been going in that market for a year now. I think it was the #1 performing international ETF last year, EWY, up over 100%. I mean, people have been flooding into this thing for a million reasons, but it just seemed like at some point this thing was going to come undone pretty hard, pretty quickly. So I'm not sure exactly what's behind it. I just think like people got a little bit ahead of themselves. It's probably still a good trade. There's still a lot of good technology companies inside of that ETF, inside of that country. But man, I don't know about hanging on to that thing forever.
Down 20% in 3 days. But when you look at these international trends, I mean, they've been so good for so long, just steady, almost in, I would say an orderly vertical line higher for some of these, MSCI country ETFs. And that's just going to come with the territory, right? When trends start to go parabolic, then expect them to correct in a parabolic fashion. I think you could step in, maybe not today, but eventually, to a lot of this, selling pressure in the emerging market areas in developed Europe. Probably going to get some deals here, because when you zoom out and you look at these charts, longer term structural bases, monster breakouts, the kind of pattern resolutions that would suggest not just one up leg or one little reaction rally, but a monster, primary trend type of reaction leg higher over the course of year, 2, 3 years.
Yeah, this is something you and I have been talking about for 2 years, which is this emerging market trade. Things have been going well. It's been going great. Big uptrends, big moves. But we've also said, like, there's got to be a point where this thing's going to slow down, and we'll come in and be buyers at that point and kind of start looking at it there as well. So I just think that this makes perfect sense for this thing to slow down just a little bit for a bit. What'd you say, Steve?
It's probably healthy. It's constructive, actually. Yeah. A little pullback, a little give back, a little backing and filling. Jason, what do you know about the Strait of Hormuz? Should we even go there?
Probably more than
Together.
We could try to go there. I could speak about it. I'm not an expert, but I could speak about it a little bit. But I mean, I just think the situation there in Iran, if we're looking at this, we're kind of going, okay, well, this could shut down some major shipping lanes is probably the easiest way to say it for people. And they have been shut down, and not to mention the amount of ships that are in that area that could be war casualties is pretty large. So once again, if you kind of get into that, you go, okay, well, if something happens like that, that's a big thing. Not to mention some ships are just being turned around and getting out of there because they're worried about, their companies are worried about all the money that they could lose by just being in that area. So I do think that this is kind of the one thing that's interesting about Iran is this is a situation that we've been in and talked about going in there doing something for many years. I mean, go back all the way to the 50s. We got Mohammad Mossadegh. We go in there under Kermit Roosevelt was like not an ambassador at the time, but he went in as an economic hitman, basically started talking to them, started creating rallies, different things to kind of get into the scenario where, okay, well, we want your oil for a little bit cheaper. We get the Shah in there at that point. Everything's kind of fine. They keep the oil flowing, and then we kind of just leave them alone for a while. Get back into the 2000s, that was one of our biggest targets, once again, to go into the Middle East and take out Iran. We never did it. But part of taking out Iran is Venezuela. You got to get into that area. You got to go into Cuba. You got to work with any of the trading partners and kind of get through them. And then once you do that, now we're going into Iran. So I kind of find the timing very interesting.
I had the under on the number of Kermit Roosevelt references on the show today. So But Jason, what I wanted to ask you was, has anything about the past couple of days, the reaction to the stuff over the weekend, has any of these moves surprised you at all?
No. I guess it's more, this is what I'm watching for here. And I think Steve's probably going to have the same sentiment, which is this news, when you have huge news events, right? Like big news events, you get a big pop up in the price of something, whatever it is. Sometimes that fades pretty quickly. And, you know, this one's kind of continuing through. Even today, being down just a little bit is kind of surprising for me. So I don't know if this is very sustainable currently, or if the war premium really hasn't fallen off just yet. I do think oil is probably in an uptrend, but I wouldn't be surprised to see some pullbacks at some point. I mean, we've had a gargantuan move out of that range recently, so let's see what happens here.
And, you know, the way they correct too will be information, but don't be surprised if you get a big down day in oil like we just saw in some of these international indexes, right? Yep. I mean, just because of where it's come from.
Yep. That's a huge move, and we've gotten there very quickly, all the way from, you know, 50s all the way to where we're at today. So if we continue to see that, I think that it's sustainable up here, but once again, I think it wouldn't be surprising to see it pull back quite a bit. You're also in a commodity. Remember, like you're not going to look for normal down days of 1% or 2%. We're probably going to see like 5% down moves, possibly 10% even happens in certain scenarios. So be ready for that at certain points. Understand that you need to be very wide in your volatility, so meaning a wide trailing stop if you're using one at all. And small positions in something like oil, the energy products, and so on. Heating oil, though, looks great. Heating oil and diesel look absolutely unbelievable currently.
Came on one of our shows last week. We showed a chart of heating oil with that VWAP. That's just
I think we have it. Slide 22. Yeah. Chart on. Slide 22. We have it.
I said, this thing just looks so good. It's got to be about to blow. I didn't know anything about Iran. It's just the price action itself would have suggested very strongly for weeks now that you want to own these things, regardless of what's going on around the world. I also think, Jason, like, isn't it going to be a pretty significant stabilizing event if, from what I understand, we are insuring ships to go through the Strait of Hormuz, and then maybe even like ushering them through safely, right? And if we could pull that off in a way that trade doesn't like stall out, create some sort of, you know, supply backlog here, then I think that's probably a big moment here, is it not?
I think so too. You know, we got to continue to just be open to however the situation is going to pan out. I think the thing for me is watching the move and the strength in the energy sector and all these things before any of this happened is a positive. So I think that this is possibly sustainable, but also, watch for situations like Steve's talking about where you possibly have, catalysts that can come in that could change things very quickly. That would be one. There's a bunch of them out there. I mean, we could speculate all day, but I think it'll show up in the price, just like Steve's talking about earlier. You get the price basically breaking out of these areas way before you have the news event that happens, which what I always say is somebody knows something somewhere. Somebody knows something somewhere. The price is always telling us the truth. And so as we're price action traders, we're usually going to be there before everybody else.
Apparently 4 ships went through the strait last night. So sounds good. So far, so good. Someone in the chat is saying, Jason is so smart. He reads great books. You're a well-read man.
I do read a lot of books. But that book is Confessions of an Economic Hitman. Great book if you want to understand oil prices. Is a New York Times bestseller by John Perkins. Understanding oil, how it happens in relation to geopolitics. One of the best books I've read on that.
Fantastic. Jason, do you find it odd that when the volatility hit Monday, yesterday morning, treasuries were down, yen's down, even gold's down? What happened? Staples got rocked yesterday. Is anything defensive, or it's just the US dollar? How do you play defense in times like these?
That's the thing that I don't know currently, because if we're looking at like long term, yeah, I think like something like gold, very tough to say anything really positive about gold all the way up here, but I think, we could possibly see that as a safe haven. Long term, you could even say maybe bonds don't go too much further long term, let's say over years. I don't think they're going up by a lot, but I also don't know if they're going down by a lot. The dollar to me is probably the safest.
That's kind of been the case for bonds, hasn't it, Jason? I mean, for years now. They're not going up much. They're not going down much. They're just kind of stuck here.
Yeah. The dollar is probably like the safe place. If people are gonna panic, if people really panic, I think they'd move into dollars. But I also don't think that one's too sustainable either. This is the hard thing, and this is something that's come up really since 2020. What do you tell people who are above, 70, 80 years old? What do they do with their retirement? What do they do with money? Telling them to go, hey, it's the safest trade currently? Stocks.
There you go.
And like that's honestly been it since 2020. If you look at it, from bonds, they went down. Commodities, I'm not going to tell, a 67-year-old person to go invest in commodities or start picking stocks or certain sectors. But I would say, hey, if you look at the stock market in times like this, it's probably where you're going to make the most money. You're going to deal with a little bit of volatility, but I think it's safer than just about all the other areas we're talking about.
Yeah, I hear you. The volatility in the equities market has been fun. You look at some of these daily ranges and the techie stuff, speculative growth stuff, the crypto stuff, the way Coinbase has been trading for like the last 5 days now, just massive ranges. So I think you are going to get some reaction rallies out of this choppy consolidation phase. Some tradable lows are in. I think there's a lot we could do out here in some of the, most liquid names. Trading the waves, Jason. Just trading the waves here, daily, weekly waves, whatever. I think you're going to have some big ones off of these lows.
Yes, I do too. I think you just got to be open to the volatility currently. I think it's going to be fine. I think we're seeing the sectors that are probably going to lead this year already. I think there's going to be, for guys like you, more tactical trades set up. And it's really a trader's market. Like, that's the thing about it. It's like, it's a trader's market. Either you're a guy like me and hopping from sector to sector, commodity to commodity, finding these trends in there, or you're riding the general direct market and you're finding ways to catch these bottoms, these mean reversion setups, these squeeze setups, and so on, and you're making money that way.
Jason,
we talk a lot you could do out here. You could do a little bit of all of it out here these days.
Steve mentioned time frames earlier. Maybe you did. What is your time frame right now?
I'm on the longer term end of the spectrum. So Steve's talking like, time frames. Steve brought that up. We're talking 6 to 12 months is my general time frame. So, I'm on the longer term time frame scale. And then, Steve, what's your general time frame currently? I know you guys do a lot of different things. So just generally, when you're the breakout multiplier, most of the trades you guys are putting out.
1 to 3 months. We're also doing much shorter term stuff over here, trading weekly calls. So really the way I look at it is I got the short term time frame, the intermediate term time frame, and then my long term time frame. And I try to look at all those things differently because I got a good question the other day. So, well, what's your favorite time frame to kind of participate in? And it's, well, depends on what's going on. I got really excited about some longer time frame trades in December when energy was coiled up and ready to pop out of a massive multi-year, compression pattern. I'm loading up, looking out a year, buying leaps in Exxon and Chevron and friends. I was excited about my longer time frame trades. Right now, if you ask me, what am I most excited about? I'm excited about my weekly calls in Coinbase and Robinhood and Palantir. You know what I mean? Because we're coming off of these lows. So it'll change depending on the action in the market and where I think the opportunities are.
Yeah. And that's a good point because you got to, once again, it's what type of trader are you? Me being systematic mainly means that my time frame can kind of stay very similar. But if you look at, a lot of guys who have feel for the market, if you're looking at feel for the market, you got to take what the market's giving you. And sometimes that market's giving you very short-term poppy trends, a lot of volatility. That's where we're at currently. And then sometimes it's giving you really nice trends like last year. And so you might want to buy leap options. So it makes sense.
I try to match the vehicle, right? Whether it's leaps or short dated calls to the pattern, just like you're saying. If I got some sort of monster base, Freeport McMoran or something, I'm buying leaps. I'm buying as much time as I can. I'm going to go way out, let it dance, come out of that base. It could be slow and sloppy, full of false starts, a pattern like that. If I'm trading some sort of short-term coil, go look at all the Bitcoin stuff, all the crypto-related equities right now. They all got these same little bear flags that look like they're failing and resolving higher. I'm going out a week or two, trying to get that cha-cha, that quick money.
Yep.
Jason, you said it's hard to say anything good about gold up here. Let's bring up a couple of your gold shorts that you have.
I'm not saying more. We were talking very long term. We're looking at a retirement account.
The chat gets triggered when you say mean things about precious metals.
Oh yeah. I'm a perma bull, guys. Don't be mean to me. I'm sensitive today. Had a long night.
Can we bring it up, Rick?
Resident gold bug.
Yeah.
Look at this, dude. Incredible. Just epic.
I mean, It's wild to really think that, once again, this is the thing for me. As a trend guy, like if I'm saying, hey, take your portfolio, put 20% in something, probably today I'm not going to say put 20% in gold. That time has probably passed. But what I am saying as a trend guy, like I can't overlook this. I am still long gold. The thing that didn't get stopped out when silver happened was gold looked just fine. It came back quite a bit. But also look at the trend. This is 14 months up for gold. I don't think I've seen a commodity have 14 straight months up, maybe ever. I'm not sure. Sam might have the data on that. Feel free to say something, Sam, if you are out there. But I really like the idea here of just looking at gold for what it is. We want to always say there's this thing that happened and this catalyst, and it could be this. And really, this thing's just in a monster uptrend. At the very least, if you don't have a position, don't short this thing. If you do have positions, just hang on to it, ride the trend, figure out your next target. Sam and I are always putting out targets all the time. So you guys who are Gold Rush members, you'll see a target, and the next target that we put out for gold after it gets above, I think it's above 5,500 really. So currently it's just kind of chopping around this area. But I think at some point we start to get above 5,500, we could be sailing up to more like 6,000, 6,500 at that point, which is pretty interesting, considering I would have thought gold at some point would have had a blow off top, and that was probably it. And then also looking at silver the other week, it kind of seemed like, hey, that might have been it. But, just like I always say, you just got to assess the data. You wait for it to come back. And Spencer, you and I had a really good show about this. Silver crashed. Okay, I'm out of the position. Well, what's going to happen? I have no idea. This thing could go sideways. And if it does sideways base out and starts to move back higher and gives another signal, yeah, I'll take it. And that's the way we all are as price action traders. If we have the right signal, we'll take it. If the probabilities are on our side, we're going to take that trade. But for that point, it was get out and wait. And then we're seeing this resumption of a trend, especially in gold. Silver is chopping around, might have a little bit more work to do. It looks decent, but it has some work to do. And it's because, as Steve said earlier, when you have a parabolic move expect a big correction to happen pretty quickly. And we did see that big correction happen in silver, which was the biggest parabolic move in the precious metal space. But the gold miners also look really good. The silver miners also look really good. So there's something to be said about this space. And if you look at ratio, which is junior gold miners to gold miners, we're still seeing that this is in an uptrend. So this basically tells me the most risk on part of the gold mining space against the gold mining space. So, okay, if I'm looking at that, I see where risk is going. Risk is still going into the riskiest gold miners out there. So that's telling me that we have some risk on still coming into this sector, which is bullish for gold, bullish for silver. But take each asset as it comes. Don't just go, okay, I need to buy all of these things because they're gold and silver. If silver is still chopping around, you don't want to buy it, don't buy it. If gold's in an uptrend, own it. You go to copper even. Copper looks good, buy that. Whatever it is, but don't just say I need to buy the whole sector blindly, especially currently.
And just overall, like, you know, without even looking to the ratio charts, just think of the way that they closed last week. Gold miners, the juniors, silver miners, everything at new highs. Gold and silver, you can't say the same for. I mean, gold and silver look constructive on their way, trying to climb back to those old highs. But the miners are already there, and I think that's, you know, that's offensive action. You like to see it. Jason, let's discuss this quick. I think there's a great question in the chat.
Mm-hmm.
Did we get an initiation thrust in oil stocks? I'll go first.
You go.
Got the traditional, like, I like to see a rate of change blowout on 5, 10, even 21 day. No massive reading there. Talking about just XLE, keeping it simple at the sector level. However, we got definitely a breath thrust. Everything in the energy space is working. If you go look at percentage of stocks above a 50-day, 20-day, whatever, we got absolute surges, percentage of stocks overbought in energy. Absolute, like, you know, historic readings there. So we did get the breath thrust. And then just look at the momentum indicator. Look at the RSI 14. You haven't gotten a reading this high on the weekly RSI since, I don't know, 2015. You got to go back over 10 years, right, to find something like this. So I think you did get the momentum thrust there. And then just the relentless bid since the second to last week of December. XLE has been positive every single week, right? So there's just an epic streak there in terms of weekly, you know, gains for the sector. So you're getting other thrust signals, in my opinion, but maybe not the traditional ones. What do you think about that?
Yeah, I think here's the thing. Also, I'll talk about something a little bit different, because I think you're right on that, Steve, and I can't really say anything to disagree with that. So if we look at the whole sector, though, if we look at, you know, we just talked about heating oil. Heating oil looks great. We look at energy stocks, XLE looks great. OIH, you go down the list, XOP, any of the ETFs look great. So for me, it's more like we're seeing these big moves, not only in one area. Like if we saw just ExxonMobil ripping, like that would be one thing and go, okay, this is a thin rally, but we're seeing it across the board. We're seeing it across international names. We're seeing it in Canada. We're seeing it in different energies, meaning like if we're looking at energy being sold in Europe, energy being sold in Asia, the futures markets all look very similar. So we're seeing big moves kind of across the board. So to me, this is why this looks very sustainable. Sam and I have highlighted crack a million times. We make a lot of jokes about that one, but the CRAK ETF, so the refiners, those are the ones that make money basically on the spread between oil and the refined products like diesel and gasoline. They're killing it. They look great. So just across the board, everything looks right for energy just to continue.
Energy is just checking all the boxes.
Yep.
As you would say.
Yep.
Bring on Kenny.
All right. Let's see what Kenny's doing today. I think he's getting down and dirty in some earnings reactions, earnings reports. Let's find out.
Kenny's just in his element right now.
Oh, yeah.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick.
Hey, what's up, Jay? What's up, Spence?
Hey, what's up? How are you, man? Good to see you.
Good to see you guys. What's shaking?
I was going to ask you, Abercrombie and Fitch shaking this morning a little bit?
I'm actually, you know what's shaking today? Nothing. Just chilling. Yesterday was so good. I just want to bask in the glory of yesterday for a couple of days.
Okay. Yeah, I heard, actually, I saw this. I saw an email that went out. yesterday about the kind of day you had.
Yeah.
Tell us about it.
Well, it was special because first of all, you got everything you wanted. You know, you got the fear was over, the overnight fear just quickly disappeared, and every trade that we were looking at was just perfection. You know, the earnings plays, the faux show bros, just absolutely incredible. And it was just one of those days where everything worked, you know. So it's a great moment to just reflect. But you know, today we come in and there's not much to choose from. So we've been talking about yesterday, but we're talking about how to stay focused. And this is one of those moments where we're just talking about discipline. And the greatest part about being a day trader is you don't have to trade. That's a great thing, you know, not having to do something. And now, you know, again, because yesterday was so good, you know, some players, I say players because I'm thinking of being at the blackjack table with my father. He says, take the money off the table. Now you're playing with house money, and it's okay if you lose it. Some day traders, when you get up to that point, we're like, all right, I'm up $3,800 now. Now I got 800. If I lose this 800, I'm still up $3,000. Don't lose your discipline because you're up big. Get more discipline. Why give money back? Just stay disciplined, stay with that same setup and wait for the same setup. Don't lose that discipline because you're having such a great day. And again, the afternoon was pretty awful yesterday. After what an amazing, you know, first couple of hours, it went dormant and there was nothing to do. And it just sat around and we just basically sat around looking at each other. But you guys want some excitement in your life. We got a reverse stock split. You guys know VCIG, VCIG? Just absolutely nuts. And we've been talking about Yeah, so we've been talking about this one. I'll show you the chart briefly here. And you know, I was saying now this is a stock where I'm going to have to short this because that's my nature. And now it's actually turning down right now. I don't know if you guys see this, but
yeah, I just had to look at the all-time high, which is $42 million.
Right. So they did a 61 for reverse split, right?
Yeah.
So what we were just talking about on the page on the site. By the way, you guys see my charts?
Yep, I got you.
Here's your VWAP. It's, you know, here's your explosion this morning. Again, I haven't been up since 5 today, but there's the turn. So when I was like, all right, this is probably over for the day, and then it broke back over the VWAP, and then it held the VWAP, and I was like, not only should you not be short, you probably should be buying this, because it's just confirmed that it doesn't want to roll over and die yet. And then it tried again. So even on these reverse stock split garbage names that you know inevitably going to go down, yes. VWAP, when I say VWAP saved my life, that's one of those moments, because I'm definitely looking to short this. That was at $14 about an hour ago. This went to 33. I mean, Kenny Glick's been destroyed. If this was 2012, I'm already down 10 grand this morning. So because it held that VWAP, now I'm looking at different levels, and now I could come at this a little bit more intelligently, looking for just a retest of the VWAP from above. So again, once again, the VWAP on every trade, it's just phenomenal when it saves you like that, and that's a big part of it. But I'll show you this one trade. This was one of the most special trades of the year, MDB. There was no reason for the stock to bounce, breaking down under years of support, garbage. But then the fake out, shakeout happened, and you got a VWAP break. But what was beautiful about this is that you had your prior day VWAP as the target, and basically kept us long this trade the whole afternoon into the afternoon, all morning into the afternoon. And this was a $235 stock that you got entered, and look how it hit to the penny, 260.15, and that was our exit. And it was one of the best trades of the year. So it's just, again, you just don't know where these amazing trades are going to come from. I haven't traded MDB in years, but because it was getting smoked, earnings were out, turns around, there's the trade. And the only second place, I guess, would be Viking. This was an amazing trade too, because in this case, you had the classic, there's your fake out, shakeout, there's the 1 minute and the multi-day VWAP break, and then it went to the 7 o'clock tick, which I tried to explain to people when somebody said, well, why do you take that into consideration, considering there was only a couple hundred shares? Because it was there, and the market's programmed to do these things. So once you have a tick, even if it's a couple hundred shares, that's factored in. And that was our goal, and we got there at 77. So special kind of day. If you have 5 of these days a year, you're good. So hopefully we get a couple more. And right now, the reason I'm chilling is I think the market's setting us up. I do think we're going lower. And, I still think this 18th, 19th, and 20th is going to be, a 3-day extravaganza of selling. But right now, this is what's happening.
I love that you made money on the long side on MongoDB. The stock was down 22% yesterday. Worst day in maybe ever, and you're making money on the long side.
Best trade of the year. No joke.
Best trade of the year. All right. Yeah. Trade live with Kenny, guys, every single day. Hitthebid.com. He's in the room starting at 7 a.m., 7:30. Trades all morning.
Lately it's been 6. Yeah.
Lately it's been 6. The man is sick. You gotta give him props for the commitment. So Kenny, see you in the room, all right?
Wait, before I go, give me what's the silver take? I know you love the gold.
Oh.
Silver take is it's getting up above some VWAPs currently. So that's something to look at. Take it from the old high, put it down there. It looks like it's trying to catch a bid. If that can catch a bid, we can see where this can go. The rest of the sector looks good, looks even better than silver. So it wouldn't be surprising to see silver catch up and get to those old highs again.
Right on, brother. All right, guys. Good luck, everybody, today.
See you, Kenny.
Later, Kenny.
All right, let's bring out Kenny, my screen just froze. There we go. Sorry. Right. Let's bring out today's featured guest. We got Brian Lund in the house. Joins us on the first Wednesday of every month. That's today. Funny how that works out. And he's here bright and early from the West Coast. Let's do it.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Brian Lund.
Good morning.
Hey,
so we're rebranding. We're the Strazza show now. Is that what?
Mm-hmm.
Love
you
it.
Like it?
Yep. Who needs that JC guy?
I think it's better this way,
right? Less faux controversial takes, right? I said it. I don't work with JC. I can say it.
Yeah. Okay. Oh.
Hey, Jason.
Brian, I'll miss you. I always think of you when we go to Future Proof, but this one's in Miami next week. I don't know. You don't like to leave California.
Yeah, I don't usually get east of Vegas unless there's a funeral or a wedding, But funny you say that. I just got my credentials for Future Proof in HB. I just got them this week.
I'm coming this year. We'll have a great time.
So, dude, hit him up now. Go for your.
Yeah, that's the move.
Yeah,
I had no problem at the Miami one, but I know the Huntington Beach is a bigger I don't know. Did you guys see? Somebody just sent me. Did you see this McDonald's CEO and the way he bites into a burger? It's all over the internet. Dude, they got to fire this guy. Who eats a burger like that? What kind of bite is that? They got to get rid of him.
Someone retweeted it and said, "This is a fund manager who's not holding any of his own positions," or something like that. Same thing.
And then the Burger King CEO goes and does a video, takes a much bigger bite. I still think that's a piker bite. You should see the way I bite into a McDonald's burger. It would blow your mind. I'm eating half the thing in one bite. Not playing around at all.
There's a blind spot there because the idea that the CEO should be doing this virally memey thing, just get in the C-suite and manage the company. Don't really.
We don't. You're not
a 14-year-old girl on TikTok. Just come on.
Fantastic. It's 2026. You got to do the social media stuff, they say.
Well, but at least hire.
I mean, we're all talking about it. I will say we're all talking about it.
Yeah, right.
Big
was that old saying that all publicity is good publicity? Isn't that what they used to say back in the day?
There you go. Brian, how do you navigate these volatile times? I asked Jack the same question yesterday. I'm so glad you're on the show today. We come in Monday, it's like, oh, nightmare, missiles are flying. Then again, yesterday, down 2% at the open. They're buying them back every day out here. The market sure seems like it wants to dig in and rally. Do you do anything like position sizing smaller, simply doing less, waiting for the dust to settle? How do you kind of go about these times?
Yeah, so I generally look at the market from a risk on, risk off, right? In my mind, I'm always gauging it from 0 to 10, right? Risk off to risk on. And what's on 10, more positions, longer time frames because you can take overnight over weekend risk, and more trades, right? Because the market's got a tailwind. When it's towards the 0 end, fewer trades, smaller position size, shorter time frames. this is a frustrating market because, one day we're up and then it looks like, hey, we're ready to break out. One day we're down. It looks like we're ready to break down. It's also a type of market where you don't really have base breakout trades, which are the type that I like. You have these snapback trades, these trades where, something's falling. Some people want to step in and try to buy the falling knife. I like to wait for the first counter trend rally, then a little bit of basing, and then if we can get the move after the move. So it's frustrating, but if you don't panic and you look at the clues, it's not, I might say it's easy, but it's not as hard. Yesterday was a great example. Market's down, the Nasdaq's down 600 points pre-market. Yet I look at my list and I see ASTS, which is barely down at all after supposedly bad earnings, right? That is a huge signal right there. That's calling you out. And then as soon as the market opens, ASTS is green. And then all you had to do was just wait to see if it formed an intraday base, which it did. It had a beautiful little flag. And there's a very low risk spot you could have got in, maybe risk $1.50 and make $7-8. So if you pay attention, if you don't panic, that's the big thing, right? If you don't try to predict where things are going, and you just listen and watch where they're going. I always say don't predict, because when you predict, not only might it not happen, but then you're kind of looking away from what could be happening. So it's a long-winded way of saying, yes, I'm doing stuff here. But for me, every time a trader says traders love volatility, like you, I go, screw you. Like, I don't want volatility. I want a market that just trends like an MFer. Like, I want the market that came out of the tariff tantrum last April that just, if you were day trading that market, you're over trading. All you had to do was just get some positions and just go like this. I like that market, and we're not in that market.
Yeah. No, I agree with you. Still messy out here. And like the ASTS, what a great example of, you get a down day where it's just red across the screen, which really the last 2 mornings were great time to go digging and looking for some relative strength, right?
Yeah.
And all
the other thing I've been doing during this period is I've got some names that I think have long-term potential. Right now, it's always a dicey game when you try to mix your trading with your investing, right? So I'm trying to keep my investing separate, but I'm also trying to approach it with a trading mindset. So I've got some names like Oscar, that I think is going to be a long-term winner. I've got a name like Poet, which I think is going to be a long-term winner. Bros, right? Some of these, if you put a weekly chart up on these, for example, you've got Poet, which is like about to break a downtrend that started in 2014.
What a baby.
Bros looks like it's kind of got a cuppish, handle-ish feel to it, right? Poet has been in a base for a year, although it's in the lower end of the base. If that's a stock that I think is going to have a good 2, 3, 5 year run, and let's just say I want to eventually have 10,000 shares of it, right? I want to get into that thing strategically. So what I've been doing is I've been selling puts, right, against positions, so that if I do get assigned the stock, I get assigned at a lower cost basis. If I don't, then I get the premium, right? If I build a position and it gets a little bit ahead of itself short term, maybe sell some calls against it. Just that strategic, what I call it active investing, right? It's not buy and hold, but it's not trading. It's trying to be strategic in building a position over time. That's what I've been doing. You can do it very slowly, right? So again, if you're trying to get 10,000 shares, get 1,000 here, get 1,000 here, sell some calls here. You see what I'm saying.
Scaling in, especially to some of these like primary trend patterns, there's really no other way. You don't want to just buy these things once, because these are long-term patterns in nature. Like something like this big base and Poet, you want to buy a couple times and then keep reducing your cost basis, if the opportunity arises. So I love that.
Yeah, I think the confusion comes when, we're all operating in multiple time frames in our head. I mean, it's very rare to have someone that's just like a pure trader. And there's only 5 different types of trades. There's a scalp, a day trade, a swing trade, active investing, and then buy and hold. Buy and hold's autopilot, right? That's super easy, dollar cost averaging. Scalping, like if I'm ever scalping, that means the market's in a bad spot. So try to get that out of there. It's really that spot between day trade and swing trade, when you're getting in day trades and seeing, do they have the price action to transition them to a swing trade, right? So that's kind of the area that people have to focus on. But you're constantly switching back and forth between objectives and timeframes, and you have to make sure that whatever position you're in or you're trying to accumulate, you're trading it in the right time frame. And if you're trading it in the right time frame, then the methodology for managing it is simple, because they all kind of true up based upon what your time frame is. But like, we're all human and we get confused and we get into something for a trade. Now we think, well, I'm going to make it an investment or vice versa. And that's why I always get in trouble through my careers, when I try to mix those time frames.
Yep. Great advice.
Yeah, I like that.
How about growth? Do you think, looking at a chart like the Mag 7, Mag's real toppy, you think we're ready to fail these tops, dig in, and get some rotation back towards big cap tech here? How are you approaching that space?
I always, whenever people ask me about big cap tech, I think about a discussion that you and I had live on a Spaces maybe 3 years ago. It was when Facebook was down like at 88, right? And everyone was saying that big cap tech was dead. And we were both saying that big cap tech does not have to get back to all-time highs the same way it got there, right? These companies are so big. They've got market share. They've got money. They've got, management. They've got talent. They can reinvent themselves so many different ways. I think a lot of these names are kind of in that mode right now. Like, you got Microsoft, which everyone says the AI is going to kill software, right? And you get companies that are laying off people. That's less Microsoft licenses, right? So people think, oh, Microsoft's dead. Well, maybe, but maybe Microsoft's smart enough to reinvent itself like it did with cloud computing. We just don't know. So it's going to take some time. People look at names like NVIDIA and they're mad because it's not just going straight up, but it's really just been basing sideways for like 3 earnings cycles, right? So I don't hate that. It's just not time to be in it. So I think the death of big cap tech is probably overstated. I think the same thing with software. I think a lot of software is going to go away, but software that has some sort of angle on proprietary data, I think will be here and will be better for it. So we'll just have to, but you just have to be patient. You just have to wait for it to wash out. It sucks. It's the hardest part of being in the market, right? We always say like, a bad market would be a bear market. Bad market is a sideways market. That's the worst market for everybody, and that's kind of what we've been in.
This is great wisdom from a guy who's been around and has seen this before. The bottom line is, it's really hard to bet against the biggest, best companies in the world, big tech. It's just a tough game to play. They have more money than God. Like you said, they can constantly invest in different things, try to catch that next mega trend. And there's just nobody in a better position in the world to keep dominating in all of these new industries and growth trends.
And it's tough to bet against this administration. And this is not a political statement. Like the number one rule in the Lund Loop is we keep politics out of it because it doesn't help us make money. But you would just be ignorant if you didn't understand that this administration is trying to put a bid under this economy, this market. You guys were just talking about it. Okay, so all these insurers in the Strait of Hormuz, they're going to raise their rates. Okay, so what does Trump do? Like, we'll just do it. We'll just underwrite it ourselves, right? I don't know if that's going to work or it's not going to work, but the point is, this administration is a business administration. They're always looking for ways to backstop the market, to backstop investors. Doesn't mean it will work, but to be too bearish against that, I mean, maybe in 2-3 years, if we get a change in administration or a change in parties, okay, but like we still got runway, I think.
Pro markets.
And what's the sectors we're looking at now? If we're looking at, we're going, okay, we got big cap tech going sideways. We've got all these things happening. What is the sector that you guys are looking for, especially you, Brian? What are you looking at that's something that, hey, this is trending. This is something that looks very similar to something coming out of like Liberation Day, let's say. Is there anything out there that you're seeing that's a sector that you like right now?
Well, obviously the big sector is energy, right? We in our trading room, I bought Devon and Oxy calls back in January, sold them the day that the missiles flew, right? Now we have to see some digestion, right? See if that space, flattens out a little bit and bases again. I think for me, we're in a tough spot because I find myself looking at sectors that have been really beaten up that I normally wouldn't look at. Like I like to look at strong sectors, but now I'm looking at some that have been beaten up that might have seen the bottom. And I think one of those is possibly the restaurant, like if you look at CMG, which looks like it might be forming like kind of an inverted Head and Shoulders, right? Maybe putting a bottom in there. There's some names like that, Kava, Bros, which I already talked about, which is so not hot. You know, it's like if I'm going to be in something, I want to be in tech. I want to be something that's fast, liquid, whatever. These names are beaten down, but they could be in a spot where they're starting to turn around. And again, if they are, and you're an investor, this is where like selling the puts lower and things like that can get you in at a better cost basis.
I like it.
No, there's a
By the
lot
way,
of
I hate Kava.
areas like
Kava
that.
sucks, right? I don't care if their food's good or not. I'm just looking at their stock, right?
Yeah.
Did they make gyros?
Gyros. You guys with your East Coast pronunciation, it's gyro. It's not VWAP. It's VWAP. Let me just come on, Steve.
Do they make euros?
They don't make gyros. Boy, it's been a while since they've been. I mean, they have the non-bread, and they probably do have. They have falafels. I know they have.
I don't know. It's all in a bowl, I think, right, Brian? Everything's in a bowl.
Stuff. I want a handheld situation for my lunch.
Yeah.
As I always say, go to your local Greek family or Mediterranean or Iranian family restaurant. You'll get way better Middle Eastern food than you'll get at Kava.
I go to Zorba's and it's fantastic. Eating about
Zorba,
3 or 4 gyros a week out here lately. We're on a thing. We're doing it. We've been stuck on it for a while.
I mean, Kava is like if they had a chain of Vietnamese restaurants. I would never go to those restaurants, right? I would go to the right.
We got Vietnamese something yesterday, Brian, from a legit spot. We drove 30 minutes to pick it up, and there was congealed pig's blood in the beef noodles. It's
like in
comes
squares?
like block. Yeah, it's like a black square.
Yeah.
I didn't eat
You need it?
it. I didn't eat it. Should I have?
Good stuff. Look, I don't like everything about Vietnamese food, but like some of that stuff that I would normally as a suburban white guy growing up here in the 70s would be like, like, thank God my wife's Vietnamese. She's introduced me to so many different things. And I initially would go, but some of it's pretty good.
It's good.
Chicken feet, yes or no?
No,
No.
Definitely not chicken feet. No.
Frog legs?
My daughter and wife love it. My son and I, we sit on the other end of the table when that happens.
I've never tried it actually.
Yeah, they're very gelatinous. Just not my thing.
I could do frog legs, but I don't know. I don't know about the chicken feet.
How about escargot? What do you think about escargot?
Oh, love it. Come on.
Right?
Love it. Well, I want
garlic butter.
Yeah, it's butter and garlic. What's not to love about butter and garlic, right?
Every time I'm at a steakhouse, it's my go-to app.
Jason, what's your go-to meal? What's your deathbed meal? What are you gonna eat?
I'm Mediterranean all the way. I'm Mediterranean. I also have like an insane thing where I can eat the same thing every day forever and ever and ever. And I have been on a Mediterranean kick for probably about a year now. So dinner every night is something Mediterranean. And not to mention, we also the best restaurant I've actually been for a long time. Actually, I just went to with Steve, which was that Lebanese restaurant in Miami. That was unbelievable. Yeah.
I'm going back. Going back to that place. I really love that meal. Jason, they do the best dips. I mean,
oh my God.
Dips.
Yeah.
I could just do the dips, the ganoush and the white stuff, the cheeky and hummus. I mean, all different flavors. Just amazing. Sit there, give me a bunch of pitas and just leave me alone with some dips.
I'm part Lebanese, but I have to have Rick explain it to me what I'm eating most of the time. So I have no idea either. I was raised by suburban white people as well, so I'm adopted.
Well, come out here for future proof. Every time the guys come out here, I take them to Little Saigon, which is right over here, and we do it up. So you'll get some good Vietnamese food there.
Yeah, I'd love to do that. I'll hit you up at some point.
All right, we will all hit you up. Brian Lund, it's always a pleasure, sir. Thanks for joining us on the morning show.
Yeah, thanks, Brian.
Thanks, guys. Appreciate it.
Thanks, Brian.
Right. I always appreciate when our guests wake up.
He's the best.
For him, it's.
I didn't know you were on a Mediterranean thing too, Jason.
It's a kick, man. It's a kick. But I also, it's because I can't eat bread now. I can't eat dairy. So like between those two, it's like, what's a great meal I can have every night? It's basically Mediterranean. And even when I venture off, it's like go out to eat with my friends. Where are we at? We're at a Japanese place, which is just, basically the same food. Or you go someplace else and it's basically the same food. So it's just like, it's easy for me to be like, what's the best, because I have a Iranian friend. I'm like, what's the best Mediterranean restaurants around here? And he'll just send me a bunch of them. So I'll hit those up or make some Mediterranean food myself. It's awesome.
Fantastic. Good for you. I need some recipes. I'm going to leave you now, guys. It's a fast market. I think we're going to go put some trades on. Busy
All right,
day.
Strazza is
All right,
getting
man.
ready for his members only call for the beat report. Usually it's Wednesdays at 11. Today it's at 10:30. You should have already got an email about that if you are in the beat report. If you're not involved with the beat report, I'll drop the link in the chat or on the screen actually right now.
I'm
to
very
just
sorry.
Get
Sorry.
involved.
We just had to change the time, Spencer. I've been trying to go to the dentist for like a month and a half now. I've already skipped 2 appointments because I was too busy, and I could barely chew in the back of my mouth at this point. So it's the last thing I want to do is leave my desk for an hour and a half during the day. But it's an emergency. I gotta go. There's no time.
Gotta go.
Bye, guys.
He's got to
get
go
it,
to the
man.
dentist.
Take it easy,
man. You got to take
Good
care
luck
of your
with the
teeth.
dentist today. Good luck with the dentist, man.
Got to take care of your teeth. All right. Take care of your teeth, everyone. All right. Let's wrap the show up and let's bring on Mary. She was kind enough to send over a few charts. I'm sensing a theme here between what you guys are talking about and the charts that Mary has sent over.
Nice.
You guys there's commonalities, which I think is a good thing. So let's bring her out and let's talk about it.
Hey, what's
Good
up, Mary?
morning.
Hey.
Nice to see you, Jason. It's been a minute.
Nice to see you as well. Did you bring charts of flowers or anything for me?
I wish. Honestly, I feel that seasonal depression setting in something fierce.
No,
Granted,
Mary, the
you
bottom
live
is
in
in.
a different place.
Mary, the bottom is in.
The bottom probably is in, but I will have snow through April.
Mary and I talk
sure.
all the time about flowers and our depression as there's nothing, because basically I grow a bunch of flowers as well. Mary has the most beautiful flowers. So we just kind of talk back and forth about that. And then we get into the depression period from basically, I want to say November all the way till April, May. So yeah. It's a lot.
Yeah.
It's a lot.
It is.
Mary, daylight savings is this weekend. We're getting more sunlight. I know you're going to get more snow because there's always the fakes. Michigan always has fake spring and then back to winter.
Multiple fake spring. Yeah.
Right.
My kids, I remember, had a snow day like the 1st of May once. It was crazy.
Yeah. But just try to stay strong for a few more weeks because the bottom is in.
Bottom's in. And maybe we have turned the corner. I actually do have some things coming up out of the ground. We did have last week like a 50, 55 degree couple of days, which was fantastic. But like I've got little tulips coming up, hyacinths, daffodils. They were all starting to come up. I'm like, no, go back to bed. Go back to bed. It's February.
You're going to die.
So, I know. So fingers crossed.
All right. Mary reads all of our research, or as much of it that she can. At least there's a common theme here. Mary, you sent over a bunch of energy charts and a bunch of software charts. So
yeah,
that reflects what these guys have been talking about.
I'm an avid listener and an avid reader, absolutely.
Yeah.
Funny enough, though, so even before everything happened over the weekend, on Friday, I shared the XLE chart because we had monthly candles. I put it up on my Twitter, and this was the breakout that I think all of us have been waiting for. I remember actually talking about this, I want to say it was even Christmas Eve, our Christmas Eve show. I shared the XLE chart before the breakout and was saying, this is the chart that I'm most interested in 2026. And now here we are. And throw up the XLE chart. I know everyone's probably already looked at it, but monster 18-year base completing, moving up and out. What I really love about this is the monthly PPO cross, which is down there at the bottom. So this move is just getting started. Yes, it's probably extended. Again, it comes back down to that time horizon. If you're looking longer term, this is just getting started. And as I've learned it, the bigger the base, the higher the space. And for me, I've had a legacy position in some energy names that it was funny enough. My husband's like, saw the move after on Friday and things were up. And then of course the news over the weekend, he's like, should we be selling? Should we be selling? I'm like, oh, no. We are just getting started. In fact, I actually, so tell me if this is a chart crime or if this is too cute, but I pulled up a chart of gold. And I said, honey, you got to take a look at this. Look at the comparison. Typically, you've got metals leading the energy move, and look at what gold has done. Look at the space. It's exactly the same. Now look where energy has the potential to go. Is it going to go that fast, that high? Who knows? But all of the ingredients are there to have a huge move in the energy space. So I'm very excited because, like I said, I've been long for a very long time. But I did bring a couple of charts along for people who might not have exposure.
And what's funny, Mary, what's funny about the XLE, what always makes me laugh about it is look how long it's taken.
18 years.
Well, no, I mean, I'm talking about the last couple of years, right? Because we first, got here, 2 years ago, right? Longer, 3 years ago. Mm-hmm. Right, was we first got back up here.
Volatility compression.
Started compressed after 22, 23. It barely tapped a high, but it's just made basically sideways since 22. But also remember, gold did the same thing. Gold made a big run,
and then look at the chart.
Yep, it went sideways until the beginning of 23, right around the time that oil topped out. So it's very interesting to kind of look at it that way and go, okay, well, let's see where this goes. So I think you're right, Mary, where it could look very similar to when we look at like GDX right now or something. We could basically overlap that in a year and be like, well, energy looked very similar now, and now energy is basically caught up to where gold is.
Yeah, exactly. So I did bring a couple of charts along for people who might not have exposure. Great defined risk. So Chevron, right there at that level, call it, let's say 190. We're above 190. Next move is to the higher. You can be long. Use that 190 as an out. Maybe give yourself, a little bit of room to let it dance. Again, time horizon. If you are a long-term investor, this is a great chart to get long and know exactly where you're going to be wrong. Same thing with Comstock Resources. Throw up that one. I'll just kind of move through these kind of quickly.
Yeah.
What I love about this one, you've got the VWAP at that same breakout area, anchored from the highs and above, let's say 20. We had a little breakout, failed, another little breakout, failed right back here at this very obvious logical line of interest where it's finding some support right now. It is still trading above that VWAP anchored from the highs. So again, a great place where you could define your risk and know when you're going, if you're wrong, you'll know soon and you'll know very clearly. I'm early, and just keep it on your watch list, put a alert on it, and get it alerted the next time it starts trading through that VWAP again. So that's kind of where my head is at long term, is the energy space. I'm going in and looking for other things that have moved. I'm setting alerts for some some pullbacks or some places where it might find support. If we do get some of that give back, I'm looking for places that I can set alerts to get long some more energy. In the shorter term, I love, actually short and long term for that matter, I love the software because again, you can easily define your risk against last week lows. So I was putting IGV in my husband's IRA last week. IGV just kind of as, overall huge pullback here in the last number of weeks, months, I guess, and finding support at those former lows. What is that? Back in April, the April 25 lows. And that has been support a couple of times. So put in kind of a great looking candle there. I would love for this one to get above the VWAP anchored from the bear market lows. I'm going to use that as confirmation, but I brought it along some software charts that look very, very similar. So we've got Microsoft. I got long. This one actually I added to my long-term position because I felt like this is a great place to just add to what I perceive is going to continue to be a long-term winner. It's, yes, it's gotten hit by news and we don't exactly know where AI is going to go, but Microsoft is one of the big boys. They're going to figure it out. One way or another, they're going to figure it out. Had a nice doji candle last week and nice indecision. Now we are green on the week. And so I like this one against last week's lows. Same with the next chart is Adobe. This is a massive top. Could be a massive top. Yes, it could be. But I love a little scoop and score, right? This one actually, I'm kind of angry at because I was in this last week and I got shaken out earlier this week. So now I'm kind of mad about this one. But I'm still looking.
She's back for revenge.
I'm back for revenge. I'm going to revenge trade this one because it did undercut those lows. previous lows. And so, did good old scoop and score. I'd say, as long as you can stay above last week's lows, I like this one to the long side for, this could be a quick trade. This could be the low that's not a top that, we continue higher for the rest of all time. Who knows? But I like the defined area of risk. And the last one I brought along, Palo Alto Networks, same idea. Is this a top? Maybe, but it dug in and found support right where it needed to. So again, if you're looking for shorter term trade or even potentially in these big cap names, a longer term name in the tech software space, it's a great place to know where you can get in, where you need to be out, and we'll see from there.
These are some good ones. I'm going to put a couple. I'm going to put the Comstock on my list. That was my favorite of the ones you just shared. That
Great.
might be going. That might be going in the portfolio. That's a nice looking chart.
I've played this one a couple of times, and I'm back in again. So again, long term, if energy is going to go, I think the Comstock goes with it.
Yep.
Great
nice
base.
Chart.
Completely agree.
Jason, before we go, any charts that we didn't get to that you wanted to hit on real fast? I know there's a bunch in the deck.
Good thought. Let's look. If we go to there's I think it's chart 15 on. Got through a couple of them real fast. But yeah, there's a few there. Let's go through some macro stuff because it's a good time to talk macro. So looking at this one here, this one really is like, for me, like what I really like to do with the intermarket charts and the ratio charts is just kind of go through those once a week and really get a feel for what's going on with the market, what direction everything's moving in. This is one of my favorite ones. This basically is showing you gold against commodities, the New York Stock Exchange, so broadly stocks against commodities, and then bonds against commodities. So at the bottom, you'll see bonds against commodities have done terribly. And a lot of people keep talking about the fact of, commodities haven't done much and so on. It's like, well, bonds have done a lot less. And not to mention, if we're talking about commodities, most of these indexes are primarily weighted in energy. We've been waiting for energy to wake up. Energy finally wakes up, and that is a huge move against the bond market currently. Now, once again, everybody's seen the big spike that happened in TLT, and they're like get very excited about it every single time it happens. It kind of remembers when you're a kid and this is for my age range, so I'm 40. So when you're a kid, you're watching TV and you're sitting there and you got the rabbit ears and you're trying to look at the Cinemax stuff so you could see possibly a naked girl. And you're like, and then you see a naked girl and everybody gets excited. Like, I would do this with my friends when we were like 12. And so everybody gets excited. Oh my God, you saw, and it kind of reminds me of TLT. Every time it rallies, we all get super excited. Yes, TLT is coming. It's going to happen. It's finally here. And it's like, I'd be surprised.
And it's over.
And it's over. Yeah. And go back to blurry static TV.
Right.
So that's the end of that. But I think here is a good time to look at if you look at the red line too, that's stocks versus commodities. That's rolling over. Even gold versus commodities. And this is something that I haven't seen at all yet because gold's been parabolic compared to commodities this entire time. It's starting to slow down. It's actually rolled over a little bit. So this is something I want to really pay attention to here. If oil and energy are really going to be where you want to be right now, which I believe it is, this is probably going to continue. Doesn't mean gold's just going to go to zero. I just think gold might slow down compared to the energy sector. Doesn't mean stocks are going to zero. I think stocks will just slow down compared to the energy sector. Bonds, I wouldn't be surprised to see those fall on their face and continue to fall on their face going forward. But maybe it just goes sideways and commodities just continue to outperform. So if we hop to the next one, this is the band squeeze against the commodities complex. So this is a CRB index, once again, very heavily weighted in energy. Highest high since 2011 is very significant. Something we haven't seen in a long time is a massive move in the energy sector. So like Mary showed earlier, we're getting XLE finally getting up and over those, I think that was 2015 or 2014, 2014 highs, that it's basically been stuck around that range since 2008. And so now we're also seeing the commodity complex, meaning this is things like gasoline, heating oil, natural gas is even in there, You have just the energy sector, oil, and so on. This all looks really good. And so now we're kind of seeing this one move. And so we have this band squeeze breakout that I've been highlighting for a long time. This is a monthly chart. A band squeeze breakout on a monthly is very significant. And so explaining the chart going back, you see that this creates big moves in the commodity complex every single time that this happens. A lot of people always ask me, well, what happened in 2020? Why didn't it work? Band squeezes don't tell you directions. That's a technical analysis. So we got the breakout, which is telling us to the upside. In 2020, we got a breakdown, which is telling us the big move was coming to the downside, which it did. And then it ripped up higher. The band squeeze continued to kind of go off after that point. But now we're here today. We've got a band squeeze, a breakout, and I don't think this thing's going to stop anytime soon. So I think that the energy sector is going to continue to move. And just hop through the next few.
Wait, hold on. Do we have a band squeeze, or are we just starting to maybe get a band squeeze?
We're just no, we have it's a band squeeze. So band squeeze is anything that's tight. So the bands are tight. So we're looking at tight bands any way you look at it when it's down in that blue area. Now it's starting to curl up and get out of it, but it hasn't even gotten out of it yet, which is telling us that this move is just starting. So once again, it's time frames too. Short term, sure, you might see pullbacks and so on, whatever. I think Mary's on a more of a time frame like me, looking 6 months, a year, even possibly 2 years, 3 years. I think that this is probably a continued trend that we're going to see in the energy sector. And then if we look at the equal weight energy sector, man, this thing is also telling us the same story. Same exact thing that Mary showed us earlier. New breakout. If you look at the small cap energy sector, it looks very similar over and over again. So next chart is the CNQ. And so Canadian energy looks very similar, also breaking out. This is what I was talking about earlier with we have really good breadth across this entire sector telling us that we possibly have a very sustainable move here. And so there's a lot of stocks we've highlighted today in this sector that you can make a lot of money in still, I think, going forward. And going to the next one, and then we can kind of end it on the last two. So Frontline, this is one that I highlighted back at the Portfolio Accelerated. I brought a couple names at that point. I think DVN, Frontline, Nexa, Tank, TK. So if we look at a bunch of these shippers, though, these are also have been doing really, really well. But also I want to highlight these massive base breakouts that we've been seeing. So as we're seeing these massive base breakouts, once again, more ammo for the energy sector. So I'm kind of going over that over and over again, but that's important. And then last but not least, this is something where, it's a structural change. Most of the time when we see structural changes, this is when we see major moves continue to happen. So structural change meaning go back to the dot-com bubble. If you look at the left side of the chart, bam, 2000. Around that time, oil in 99 went under $10 a barrel. It was the end of oil. The internet has taken over. It's changed everything. Have we heard this before? Yeah, we've heard this before. It happened also in the 70s. It also happened in the 30s and so on. Technology was going to take over everything many times. Then basically oil says, just kidding, moves up to $150 all the way from $10. In 2008, it topped around $150. Go back to the 2020 election. Right around that point in April of 2020, we had oil prices go negative in the front month contract. That negative pricing in the front month contract led to a massive supply issue, which created the shippers to move up quite a bit. If you guys remember just a second ago, we talked about some of the shipping stocks. And then as that kind of happened, we moved in towards the end of the year, right after the election, and then the energy sector went crazy. Small caps went crazy as well. So this is another thing that's another point to say, okay, we're in probably a very strong environment for energy. Then get to where we're at today, seeing the same thing. Small caps are leading once again. I don't know what the catalyst is just yet. It's easy to look back and say exactly what it is. We could say it's this, it's Iran, it's Venezuela. I got on the morning show during the Venezuela situation and said, hey, I'm pretty sure oil has bottomed out right here. So if we're looking at that, I think it has. And right there where that question mark is where this turn happened. We started to get very heavily into the small cap space, started getting the energy space even more, and energy has taken off and not looked back. So basically all of this to say that I think that the energy trade is here to stay for a while. And I think things like agribusiness, copper miners, metals and mining, steel stocks, aluminum stocks, lithium, even solar are probably going to do well this year in this current cycle.
It is so wild to me to look at this chart and look at the volatility of the last few years compared to like 2002 to 2019, where we pretty much had a pretty consistent slow and steady uptrend of large caps outperforming small caps, and the last 5 years has been back and forth, right? Violent periods of outperformance on both sides, and that is not how things used to be. So
what we're looking at here in the 2020s, and I think a lot's changed, like not as in like the markets have always been volatile, things have always happened, but since 2020 there's been a lot of volatility in life. I mean, like just going like the situation of shutting down the economy, businesses just up and vanished. I had 2 businesses that just poof, that was it. Like you basically have a very different scenario here. And so as things are kind of fleeting and a little bit different and more volatile in life, I think it's showing up in markets as well.
Great charts, Jason. Everyone, if you want more Jason Purrs in your life, I would strongly recommend you get his research over at the Gold Rush. I will put the link up on the screen. Jason and Sam do tremendous work multiple times a week, sending out reports, sending out videos, trades, obviously, what they're doing with their portfolios, price targets on the upside and the downside, everything you need to trade the entire commodities complex, right? Whether, gold and beyond, right? Commodities, fixed income, right? Currencies, all of it, right?
We are the Buzz Lightyear of the gold mining space. To infinity and beyond.
There we go. Where is my gold? Where's my Gold Rush link? I'm not seeing my Gold Rush link in here. I don't know why, but
let me just answer that for you. You want more Jason Purrs in your life.
There we go.
Do it, guys.
allstarcharts.com/gold-rush. You can get Jason's research in your inbox and on your screen and in your portfolio every single day. Jason, thank you for guest hosting today. Mary, thanks for stopping by. Thank you to Brian Lund, Kenny Glick. Thanks to everyone in the chat. That's it for us here. It's a very busy day on Stock Market TV. Kenny Glick will be live at 11. Jeff Mackey will be live at 1. And then at 4 o'clock, Strazza is going live for a special. He never goes live at the close. He's going to go live at the close today for a special live stream to talk about the fast trades he's been making. We talked about time frames earlier. Talking about, someone like Jason is looking at 12 months. Strazza is looking at like a week, right? Mm-hmm. And Strazza is in a great mood because a lot of his fast trades have been working, and he's going to talk all about that specific strategy for trading using a short-term time frame. That'll be today at 4 o'clock. The link is on the screen and in the chat on YouTube. We will see you there. And then to wrap it all up today, 5 o'clock Eastern time, Riley Roseby going live to tell us about how in the future there will be no drivers and it'll be fully autonomous. And he's thinking about that, and he's positioning his portfolio for it. So that's 5 o'clock today. Godspeed Live with Riley Roseby. Thank you everyone for watching. That's it. Go make some money. If JC were here, he would say YOLO responsibly. So I'll pass the message along.
Later, guys.
Thanks, guys.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off.